It's about that time of day again. My name is Joseph. It's Monday evening, February 13th, 2017. Welcome back to your nightly newsletter. We're covering crude oil, S&P, gold, euro, and FDAX this evening. Crude is bearish, but a triple bottom to finish the session today tells us exactly where to look for the best selling opportunities and where to beware of traps waiting around the corner tomorrow. The S&P is bullish, and we're watching two specific trend lines to help us find the most reliable buying opportunities tomorrow. Gold is bearish, but the way the market reacted over lunch tells us to be watching the moving average very closely for confirmation of where we're going next. The euro is mighty bearish today, but the end of this session left us with some big important clues telling us where and where not to be looking for selling opportunities on Tuesday. And of course the FDAX is bullish, and we're using a flag pattern on the chart tonight to tell us where to avoid those losses and where to find the winners for tomorrow. We have another great newsletter in store for you guys and gals tonight. We got plenty of reliable setting up for tomorrow. Another great newsletter. Before we jump in though, let's remind you guys, only place to watch the full length version of this video is on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of that YouTube video. Follow that link and come here and watch the full length version on the blog at sidewaysmarkets.com. While you're here, don't forget, join the mailing list. I'll send you an email every evening when this newsletter video goes live. Follow me on social. I'm always posting charts and important updates throughout the day on my many different social media channels in the lower left-hand corner. Below the video tonight, you can download all the charts you see me using in tonight's video. You can have those charts ready on your computer for tomorrow's session. Just follow that link to download today's charts below the video on the blog. And please don't forget to grab your free pass. As I always remind you guys here, you're going to learn more with me in 90 minutes as a guest in our Trade with the Free Pass than you will anywhere else on the interwebs. If you're not an advanced member, grab your free pass in the upper right-hand corner and come out and join me as a guest this week. And of course, don't forget, if you're brand new here to the SOT community, get a great frequently asked questions page. Learn the who, what, where, when, and why. We are well known as being the industry leader in futures trading strategies and professional grade education. Boy, hope you had a great weekend out there. Boy, the snow's coming down around the country here in the U.S. Hope you guys are warm and dry out there right now. I had a beautiful weekend here in Los Angeles. Got a break from the rain. It's a rainy season here in L.A., and we definitely can use it. Let's jump in though. We got a busy week ahead of us. It's going to be yelling. It's going to be yelling, and more yelling here this week as we look into Tuesday and Wednesday. Let's take a look here. Tomorrow's Tuesday, February the 14th. First of all, major news tonight out of China. We got some news coming out tonight, 8:30 p.m. tonight from the CPI from our friends in China. So be aware of that if you trade in the overnight Asian session. And then tomorrow morning, it is really a peppering of news here coming out of London. We got the GDP in Germany. We got the Swissy Consumer Price Index. We're going to have GDP from Italy, from Great Britain, right? We'll see the PPI, and of course the ZOO survey right ahead of the GDP flash at 5 a.m. A peppering of news tomorrow morning right before we get into the U.S. session. Now, into the U.S. session tomorrow, we have the 8:30 PPI number in the U.S. session, and then all eyes shift to that Janet Yellen testimony. This is that semi-annual, right? It happens a few times every year, right? She, of course, will testify on Capitol Hill in front of the Senate Banking Committee. This is going to be a really big deal this week, right? This is the first time she's testified with our new president. And, you know, if you haven't been paying attention over the past few weeks, there's been a lot of new stuff that's coming out there, right, with our new president here in the United States. And so I'm assuming tomorrow a lot of analysts, a lot of traders will be waiting to see kind of what she's going to say and how she's going to react, what type of questions are going to be asked. You know, remember, the first half an hour of this, she'll be reading her statement at 10 a.m. And then after that, it usually will go until about 12:30, 1 o'clock, where you're going to see a peppering, right, of just kind of off-the-cuff, unscripted questions, right, from the House Senate or the Senate Banking Committee. So keep an eye on that tomorrow. If I had to guess right now, I was the next 2 days, Tuesday and Wednesday, are going to be all about getting in early, getting those trades taken, and then ahead of that testimony from Janet Yellen at 10 a.m. tomorrow. So the rule of thumb tomorrow and Wednesday is going to be get to it early. Get to it early. Thursday and Friday, we start opening up a little bit more here, but tomorrow, a peppering of news here in the London session. That should definitely get the volume cruising here. And then, of course, again, if you're with me tomorrow in the trade room at 8 o'clock Eastern time, our job tomorrow is going to be to find those trades early because, and again, when Yellen speaks, usually anytime after 9:30, things start slowing down. Tomorrow, with it being the first time she's testified in the new year with a new president, with all these new things going on, I'm anticipating it to be a real sharp slowdown as traders kind of watch on television to see what's going on. So obviously, I hope I'm wrong. I really do hope I'm wrong tomorrow. I hope we can trade right through 10 a.m. But I'm expecting it to be relatively slow until tomorrow afternoon. Once we get into that 9:45, 10 a.m. time period. So watch that volume. Watch out and see what's going on that tomorrow. And again, we'll be in the trade room tomorrow morning with all of our students at 8 o'clock Eastern time, and we'll be doing all of this together with you guys, right? So don't forget, you don't need to go at it alone. Let's jump right in here. We got crude, S&P, gold, euro, and FDAX. Starting off, of course, here with the black gold, right? The Texas T, the crude oil futures. We're definitely bearish. We finished today's session inside a range right at the low of the session. Now, the trading range is a big clue telling us the most reliable selling opportunities will come up above the highs, and beware selling a breakout to the lows because of those major support levels waiting. One thing to keep an eye on tomorrow is the volume rollover between the 317 and the 417. We will be watching that volume rollover. Right now we're seeing the three. It's very, very early here in the overnight session, but right now you can see it looks like we are poised here for a day of trading in the 317 tomorrow. We will be watching that closely, though. We will definitely be watching that closely to see whenever the volume rolls over to the 417 contract. Today is, of course, the 13th. We know sometime this week we're probably going to see that volume roll over right over to the 417 contract. So watch the volume on 417 this week. Once the volume rolls to the 417, we'll start trading the 417, right? But nothing to worry about until then. The most important clues right now on this chart, I see really a bunch of real important clues here. First of all, the day ends in a trading range, right? Right at the low of the day, right? So ends in a trading range. Big collapse down. Whenever we see a market strong move down, right, and we know we're in a range, what are we doing? We're looking to sell it as it goes up and bring it back down to retest that low. That's the most important clue here right now. Strong move down, finishes the day right at the low of day. It's just the buyers are pinned to the floor right now. Nobody's going to think about buying this market unless they're buying out of a short position. So our job right now is get this price up and bring this price right back down again. Another really important clue is we have an untested reversal line there at 53.29. Now these are always tough because the market was so bearish today, finished the session right so strong to the downside that we may only get this price up to 53.06, right? It might go up and then right back down again. So we may not get that market all the way up to that 53.29 before it comes tumbling back down, but that is definitely a big area of resistance that we'll certainly be keeping an eye on. Another important clue, third of three clues here, outside of course of rollover tomorrow, is what's waiting below that range. The double down and of course that measured move, right? Take that big strong move down to start the session off, right? Project it into the future, and of course that gives you right your double down. 1, 2, and 3. That gives you your triple measured move. So the reality is I want to sell the high of that trading range, but if it runs back through the range, now I got to be really careful trying to sell down here because it's not a lot of open space. And when we don't have a big enough target incentive, like I always remind you guys in this newsletter, in a bear market, the most reliable selling opportunities will come in an area of resistance with a lot of room for a big target, right? That way everybody can get on, can participate in that move lower. If we can get some of these resistance areas overhead, right? This trend line obviously here is included in that. But if we can get this market up, area of resistance, now there's a lot of room, right, to go back down to that, right? Go back down to that low. The opposite isn't true though as we go lower. If we go lower, now yes, that support does become resistance, but now there just isn't as much meat on the bone for those sellers. So what I'll look for is up top here, right? We'll look for failures, we'll look for traps, we'll look for pullbacks, we'll look for strength. I mean, as price goes higher, we have a plethora of different options that we can take, right? As this market goes up, failure, right, into trap, into pullback, into strength. There's a lot of different entry tools we can use, right, to get in on that move coming back down. And don't forget, in the advanced course, we go over in detail our exact entry triggers and all this stuff. What you want to be aware of right now is bears have control, get it up so we can sell it back down. I'll, of course, look forward to teaching you the entry triggers, right, as a client. With that said now, what do we do if it rolls over? Well, if it rolls over, here's where I like to play the old okey doke, right? Price pulls lower. This pullback, right, this is what most people would look to trade. And this is what I did when I was a new trader, right, is you would look to sell that breakout pullback. That's a real tough trade to take. We saw an example of this on the S&P last week, and it worked flawlessly. What I like to do is anticipate there are going to be buyers that are trying to fade that breakout. Anticipate there are sellers taking profit and buyers trying to buy, right, a failed breakout. Remember, most range breakouts fail. And so when you try to sell below a trading range, the bears who are already in that move are taking their profit. They're buying their way out. Buyers are trying to fade the move. They're trying to catch the sellers on the wrong side of the market. What I like to do is I like to wait for those buyers, right, to take the bait, go higher, and then use that as a trap high, right? We kind of call it the okey doke, but really all it is, right, it's a breakout pullback with a trap high. Basically, you're anticipating that initial breakout pullback will fail. Well, you're anticipating its low reliability because you're trying to trade a breakout, and most breakouts fail. At the same time, the buyers who are trying to buy back into that range, right, they're going against the trend, and of course, right, we usually get the moving average, right, coming overhead as well, and we can incorporate that into the move going back down to that low. The reality, though, right now is that measured move is the objective, so we really don't want to chase after this move going lower. So it's going to be a little bit of finesse, right, getting into that trade as the price goes lower. Clearly, though, we'd like to see this market bounce a little bit here so we can see if we can sell this thing up off those highs. Really great chart here on crude, and a great opportunity here for some great trades tomorrow. How about some S&P? The S&P is bullish, but after such a strong move higher today, we can assume that a lot of buyers are willing to buy, right, aren't willing to buy the high. So we know the most reliable buying opportunities will come after a deep pullback to support levels below, such as the low of the channel or the battle zone tomorrow for a run up to retest the high and possibly, right, up to a measured move. Here's an example. We have two of these tonight. One, of course, on the S&P, one being on the FDAX. As you can see, the market made a real strong move. It didn't even pull back to the moving average until the tail end of today's session. So real strong move. A lot of conservative buyers, I would assume, right, just didn't feel comfortable buying the high, and so they'll be waiting for a deeper pullback here. Couple things in this chart right now. The first thing obviously is this channel, right? This channel is a multi-tiered channel. It's a very strong channel. You could also draw it as a spiking channel as well with a correction zone, right, back below the battle zone. But you know, we've seen this before here on the S&P. The S&P, much like a lot of the other equity indexes, are almost blindly bullish right now. So anything that pulls back, you know, I would normally say we're going to look for a two-legged correction here, but we may not get that deep a pullback here. Really, what we're looking for here is a pullback to an area of support, right? Area of support being that rising trend line, area of support being, right, this 24.5 prior swing, right, prior reversal line, right, 21 3/4. Really anything here that pulls back, right, in a bull channel, we want to be a buyer on this. Now, another real important clue is this trend line. This trend line is a nice gem of a clue here because this one now will give us a chance here now, right, to use that trend line as an area of support, whereas it'll be resistance overhead, right? But now that allows us now, right, to use that as an area of support. One last thing here. We have a triple up. And that triple up combined with the high of day is creating this no trade zone. That no trade zone, and I realize, right, we've been dealing with a market that is blindly bullish, but I don't want to get in the habit of buying into the high of day after a strong run took the entire day by storm today. We have to assume there'll be some profit taking. We have to assume